Good afternoon, everyone. My name is Michael Manderino, owner and financial advisor of 123 Investing LLC. And today we're in for a treat. We have Janet Schaum with Old Republic Exchange. She's a qualified intermediary and a vice president and regional sales executive. And we're here to talk about 1031 exchange. So Janet, without further ado, please, welcome.
Thank you so much, Michael. Thank you for having me, and thank you for joining us today. Today's class is an overview of 1031 exchanges with Old Republic Exchange with yours truly. Old Republic Exchange Company is a nationwide qualified intermediary for 1031 tax-deferred exchanges. So companies like ours, our sole function is just to facilitate the exchange. Companies like ours, we do not provide tax or legal advice, so we always encourage a taxpayer who's interested in doing an exchange to always have an initial discussion with their tax or legal representative before engaging the services of a QI, just as a precaution. Companies like ours also cannot offer any determinations on what does and doesn't qualify for an exchange, but we can advise on things that could be a potential audit risk or things to go back to your tax advisor on with regards to your transaction. So we're going to talk about exchange. We're going to do a brief overview, and then we'll allow for some questions at the end. So we'll go ahead and get started. So what is a 1031 exchange? If you're not familiar with Section 1031, it comes from the Internal Revenue Code that provides that a taxpayer may sell property and defer payment of any capital gains tax if that taxpayer uses the proceeds to acquire like-kind replacement property. So what does that mean, like-kind? So it doesn't necessarily mean that the properties being sold and purchased have to be identical in character. It just means that both the property being sold and the property being acquired are both held for investment or for business purpose. And then Section 1031 of the tax code specifically states the same. So you couldn't, for example, sell a primary home and acquire an investment property and do a 1031 exchange. It's got to be investment to investment and vice versa. I couldn't sell an investment property and buy my primary home. Now, what I could do is if I'm selling a property as an investment and I'm doing a 1031 exchange, I can acquire an investment property, hold it for a couple of years, and then convert it to my primary forever home if I choose to do so. I just would need to talk to my CPA about the timing on when to do that. Why do people do a 1031 exchange? Well, obviously, capital gains tax are fairly substantial. So depending on what income tax bracket you fall under, you could be paying upwards of 15 to 20% or more in capital gains tax on the sale of investment property without a 1031 exchange. So that's thousands of dollars that could be left on the table that could be subject to tax. The 1031 exchange allows the real estate investor to reinvest into property that they could use for passive investment into income producing property. For example, say a client, and this is actually a real world example. I had a client that was selling a piece of raw land. It was raw land that had appreciated in value. He acquired it about 10 years ago. Well, that property appreciated and he acquired it for $75,000. It appreciated in value and he received an offer 10 years later for $3 million. So with that one 1031 exchange client, there's a lot of options there. He sold this one piece of raw land and now he's looking at options. He's looking at possibly buying a single family home with some of the proceeds that he'll use for a rental. He's looking at buying something in the investment, like commercial real estate space. He may acquire an interest in a DST with some of the proceeds. There's just a lot of options there. So having that 1031 exchange allows you to diversify your real estate portfolio and even consolidate assets. So if you're going from one property, maybe you want to diversify and acquire three, like in that raw land example, or maybe you want to go from maybe selling three relinquished properties and consolidating into one larger property and doing an exchange. So if you're tired of being a landlord or something like that, and maybe you want to get rid of your rental properties, you could exchange a couple of rental properties and acquire one asset, or maybe possibly reinvest the proceeds into a DST where that property is managed by others. And Michael can talk about that. What types of what qualifies as like kind. So any type of real property that's held for investment qualifies. So these are just some examples. This is not an all-inclusive list. Single family home, except for primary, like we discussed, for multifamily, vacant land for a strip mall, hotel for a farm. Believe it or not, here in Florida, people do exchanges of boat slips. As long as the boat slip is considered real property via local law and ordinance, I can exchange a boat slip and acquire a single family home or other like kind property that I'll hold for investment. This is just what we do. This is how basically the exchange works. So properties being sold and purchased must be held for investment. Again, primary homes do not qualify. You have to use the services of a qualified intermediary or QI or exchange agent. That's what Old Republic Exchange does. So we're a nationwide qualified intermediary. So no matter where the properties are being sold and purchased, we can still help facilitate that transaction. So if you have clients selling in other states like New York or New Jersey, and I happen to be located in Florida, and they're looking to reinvest the proceeds into property in Florida, they could do a like kind exchange and use us for those services. The taxpayer cannot be in either actual or constructive receipt of the exchange proceeds during the exchange period at any time. If they are in actual or constructive receipt of the funds without that exchange agreement being entered into, it's not a valid exchange. So it's very crucial that you have advanced planning. Typically, most exchanges can be set up in less than an hour. If it's a pretty straightforward transaction, we can set it up pretty quickly. We like to have about a week lead time to set up a file, just to give the all parties an opportunity to review the exchange agreement. We need to have the settlement agent review our closing instructions, things like that. So having a week lead time gives all party, opportunity to review the materials, review the instructions, review the documents, but obviously we can work with much shorter time frames if needed. The taxpayer must, within 45 calendar days of the closing on the sale, identify their replacement property, and they have 6 months from the date of the closing on the sale to acquire and get under contract and acquire one or more of the identified properties acquired during the exchange period. So 45 days to identify, and then you have the rest of the 180-day exchange period to get one or more of those properties under contract and closed on. This is just your delayed exchange timeline. If you go out on our website, oldrepublicexchange.com, we actually have a calculators tab. If you plug in a closing date, it'll automatically generate when your 45-day identification period ends, when your 6-month exchange period ends. Part of the services we provide is we monitor these exchange timelines. So you do want to confirm with your qualified intermediary that they are also doing the same. This is what we do. Old Republic Exchange Company acts as qualified intermediary as required by the Treasury regulations. Before the transfer of the relinquished property, we enter into a written exchange agreement with the taxpayer, and pursuant to the terms of that agreement, we acquire the relinquished property from the taxpayer and transfer it to the buyer, and we acquire the replacement property from the third-party seller and transfers it to the taxpayer. We prepare all documents necessary for the exchange. That is your exchange agreement, your assignment agreements, your closing instructions, all those things. We consult with the exchanger's tax advisor. We execute closing documents as principal, as seller in the relinquished closing, and as buyer in the replacement closing. We hold the exchange proceeds to prevent the taxpayer from either actual or constructive receipt of the funds. And we also coordinate with closing agents, real estate agents, tax, and legal advisors. So if you have clients that are nervous about doing an exchange and they'd like to have us on a call with their tax or legal advisor, we're happy to coordinate that, and there's never any consultation fee. Just a quick recap on the benefits of 1031 exchange. Remember what we said, deferring capital gains tax can be anywhere from 15 to 20% or more left on the table with taxes. So you're able to fully defer the capital gains tax on the sale as long as you buy another property of equal or greater value. And remember, properties being sold and purchased don't have to be identical. The 1031 exchange allows the real estate investor to leverage for wealth building, relocate assets, For example, maybe the goal for an individual is just to do an exchange because the original property they acquired wasn't really generating the income they were hoping it would, or they want to get out of being a landlord and they'd like to buy something in the DST space. They can relocate their assets and do an exchange. A goal for a lot of individuals doing these exchanges is for estate and tax planning. So basically, they keep doing these 1031 exchanges until they pass away. The property then passes on to their heirs at a stepped-up basis, so all that tax is forgiven. The heirs receive the property at whatever the fair market value is at the time of the owner's death, so they can do exchanges. So lots of great reasons to exchange. These are just some of the benefits. When selecting an intermediary, this is really important. This is very crucial. Companies like Old Republic Exchange are not regulated like the title insurance industry is. So you do want to make sure that the qualified intermediary has been thoroughly vetted by the taxpayer who is participating in the exchange. You know, being in this course today, that in order for an exchange to comply, you have to have that exchange agreement in place on or before the date of the closing on the sale or before any transactions occur. As there are different types of exchanges, sometimes there's circumstances where the purchase happens before the sale, like in a reverse 1031 exchange, you still have to have that agreement in place with the QI before the closing. You also want to look at the financial security and strength of the QI handling the exchange. And you also want to look at the experience. Old Republic Exchange's parent company, Old Republic International, is on the New York Stock Exchange's ORI, which is a multi-billion-dollar corporation. Old Republic Exchange also carries a $50 million errors and omissions policy, and we have the highest fidelity bond coverage in the industry at $120 million. That fidelity bond covers acts of dishonesty or fraud, so it's really important to ask what type of bond and insurance coverage the qualified intermediary you're working with has. For added security, Old Republic Exchange will also issue a letter of guarantee, which indemnifies the taxpayer against loss should something go wrong with the exchange. Now, that letter of guarantee does not indemnify against bank failure, but do know that we only hold funds in FDIC insured pooled trust accounts. So you have that protection as well. Funds are never invested either. And then this is my contact information. So if you have any questions, you're free to reach out to me. You can download my QR code information and download my contact information. And I would also encourage you to follow Old Republic Exchange. Follow our social media pages. We have a Facebook page. We also have a LinkedIn page. And we always share great information, education-based information, including information about any potential extensions to the IRS deadlines if there were to be like a disaster declaration in the event of bad weather, such as like a hurricane. We have a lot of hurricanes here in Florida. If there's any California, they have the wildfires, things like that. If there's any extensions to the 45 or 180-day exchange period, and those extensions have been granted by the IRS, we'll communicate the same on our social media pages as well. But that's all I have for today. I do appreciate you joining us. Thank you.
Janet, that was fantastic. Thank you so much. I just have kind of some follow-up questions to that. How early in the process should someone be contacting you as far as when they're getting ready to start looking for a potentially 1031 exchange opportunity?
I would suggest about a week before closing, once the due diligence is over on the property being sold. That way, if they're not pulling us in, too soon, in case something goes, wrong at inspection or something like that, we want to make sure the due diligence has been taken care of. If there's any appraisal contingencies, financing contingencies, inspection contingencies, once all those things are taken care of and you basically have the clear to close, that's when we like to step in. Usually about a week before closing is sufficient, but obviously we can work with much shorter timeframes as well.
Perfect. Thank you. And do you provide extra material on your website for folks who are really starting to just learn about 1031 exchanges?
We do. We have a lot of great e-reports out there, articles on different scenarios, different topics with regard to the exchange. For example, questions such as, seller financing, if someone decided they wanted to incorporate seller financing into the transaction, because, mortgage rates are a little high right now. They might want to review an article on that. If there's any information about, let's see if there's any information with regards to identifying replacement property and what qualifies as replacement property, they could pull any report. We also have a YouTube channel as well. So there's lots of great information there.
Great. Well, Janet, we thank you so much for your time today. Really, really appreciate it. For those that you want to go ahead and for those that are listening, say what the best way of contacting you, Janet.
They can call me directly. Email is probably preferred. You usually get a quicker response with email just because we get a lot of phone calls. Also text message is great too. But a good old fashioned phone call, is fine as well.
Perfect. Well, thanks again, Janet, for your time. Really appreciate it. And really appreciate you tuning in today. Again, Michael Manderino, financial advisors for 123 Investing, financial planning made easy. Thank you and God bless.
Thank you.